alternate with stocks. There tends to be 20-year bull markets in stocks, which was 1980 to 2000 for us, followed by 20-year bull markets in commodities, which would be 2000 to 2020. Approximately it can be 18 years, it can be 15 years, it can be 19 years. It doesn't have to be 20, it's approximately. We are now in that commodity cycle. And in that commodity cycle, those are inflationary cycles also. We're in that cycle, and the Federal Reserve is doing everything possible to pump that cycle up as much as possible instead of dampening it down. We were here on September 18th, the day they lowered interest rates 50 basis points. We had an impassioned discussion of you must get out of the dollar, you must buy gold and silver. The Fed is going to destroy the value of our currency and create massive inflation. And we said it that day, and it's on record. The real evaluation of gold has to be as a currency. We're constantly reading in the press, oh, the Indians don't want to buy it for jewelry and they're not making less jewelry. And ultimately, that will be irrelevant. Gold will be like the source of money. Traditionally, throughout thousands of years, it's been the source of money. It is the closest thing to actual money. And currency like dollars and euros are not actual money. Euros are closer to the value of actual money. The dollar is like widening, making this huge gap away from actual money right now. Below $1,000, if you are a short-term trader, gold has lots of psychological resistance at 1,000. And psychological means it's in people's heads, it's not on the chart. This is an all-time high. Lots of people are looking at this level, they say, oh, I'm going to sell, I'm going to sell. So if gold gets there, even 995 or 990, you might get to 1,010, you should expect some pullback and some drop. And if you're a short-term trader, you can sell there and buy back at a lower level. If you're a long-term trader, you should just totally ignore it. 1,000 is not the long-term top for gold. This is the beginning of a move up that will last probably several years. And the ultimate high in gold will be in the thousands with an S after that word. The ultimate high could be 5,000, 10,000. It's like it's inconceivable right now to where it would be. And all bubbles are like it. This is not the first bubble in history. There's people who study bubbles, they're all the same. They have the same patterns. There's always this in move where they go straight up, and panic buying ensues, and people become desperate to buy gold. Now gold has particular potential to get really high, because right now the whole world holdings of gold is small, it's incredibly small, so if demand increases a lot, there's nothing to buy. And plus central banks own a certain amount. The GLD ETF, which has only existed for 3 years, is the third largest gold holder in the world already. The supply will diminish as this price goes up. And when people become desperate to buy, there'll be nothing to buy. So you get the squeeze that just shoots them straight up. And you own gold at that time, you will become rich in a very short period of time.
Especially if you sell it.
Well, you must sell it. You must sell it. Oil's inflation-adjusted high was $100. Gold's inflation-adjusted high is $2,200. So for gold to get to that same level, you have to have $2,200 gold. So oil has gotten that. I think it's going to break above that $100 level and go much, much higher. Now that's serious. Once again, that's strong psychological resistance, just like 1,000 is for gold. And indeed, oil pulled back and dropped, and the people selling it, it's the same thing. The oil is priced in dollars, because the dollar is the reserve currency. And there was actually some sheik that came out just a couple of days ago and said, well, within 10 years, oil is going to be priced in euros, dollars. And we have said we think it's going to happen much sooner. We've actually mentioned that here. The oil ceases to be priced in dollars, the dollar would literally collapse at that point in time. Because people all over the world have to borrow dollars to buy oil. They will not have to do that anymore. The demand for the dollar will drop instantly. And then the price will follow. And you better be holding gold that day.